The big story as 2015 comes to a close was the Federal Reserve's decision to raise its benchmark lending rate by 0.25%.
And it reflects the committee's confidence that the economy will continue to strengthen.
Despite ups and downs early in the year, U.S. growth appears to have stabilized, and unemployment is at a 7-year low. Ratings agency Standard & Poor's is looking at 2.7% growth in 2016, and something the U.S. has not seen in more than 7 years: full employment.
Good news, we are seeing improvement, and we do expect to see, as the economy gets stronger and stronger, we do expect to see that unemployment rate dip down a little bit lower, closer to 4.6% by year end next year.
But the outlook for the global economy is a bit murkier, according to the National Association for Business Economics.
The outlook around the world is probably for less growth than the U.S. has been experiencing, at least among developed nations.
A UN report on global economic prospects sees continuing headwinds around the world, especially in emerging markets, which once attracted investors seeking higher rates of return. Here's Gus Faucher, economist at PNC Financial Services, on Skype.
I think that it is going to be more difficult for emerging markets. They're much more subject to big capital flows in and out. So there could be some dislocation there as the Fed starts to raise rates in the United States.
And as 2016 begins, persistent worries remain regarding slower growth in Europe and in China. Despite the uncertainties, most economists say warnings about a potential worldwide recession are exaggerated.
Obviously, things go wrong. We see certainly worries in the Eurozone, softness in China, all these things suggesting that that it will be a bumpy road ahead. But I don't necessarily say that suggests a recession is imminent.
Despite an improving U.S. outlook, the rising value of the dollar is likely to hurt exporters in 2016, even as plunging oil prices reduce global energy investments. Mil Arcega, VOA News, Washington.